Vikas Khemani, founder at Carnelian Capital Advisors, is joining us right now to discuss all of these factors and much more. Vikas, thanks very much for taking out the time. It's looking like somewhat of a rush right now to get into the index and get into the markets as such ahead of the budget. The world seems to be digesting all the various information and every event that is taking place in its stride. At least the equity markets are. Globally as well, still perched at record highs. For India, making record high one after the other. What's your sense as to how the markets are likely to do in this coming year?
Hi. So I think, there are lots of events which keeps on happening, and, we have to kind of decipher and make out what is a sort of medium term to longer term trend, because, if you can get lost into small events or everyday events, you will probably miss the bigger picture. And the way I see the bigger picture evolving from here, I think, as far as India is concerned, we are just emerging out of a, long drawn liquidity crisis which started from the ILFS. We are also coming out of, a huge amount of reforms which were carried out, by the government, which also got followed by a liquidity crisis. So we had, a lot of problems getting combined together. And I think we are beginning to see some sort of, stability and liquidity getting towards risky assets, which is coming out of complete risk averseness. Similarly, if I were to look at the global environment, there also we are seeing from a risk off or a reverse averseness to a little bit of more risk appetite or risk appetite towards emerging market kind of environment. 2013 to 18, we saw Fed was getting back to normalcy. They were tightening the balance sheet, raising rates. 2019 was the first year where they stopped raising rates and started creating a way for further expansion of the balance sheet, which is going to create two situations. One, the dollar strength will go away and dollar will start weakening, and secondly, I think the liquidity towards emerging market will be fairly easy. So I think one of the precondition of getting the risk appetite back on table is an easy liquidity scenario, and one of the precursor for risk off is a tight liquidity. So I think we are seeing easy liquidity scenario emerging, and that is going to remain irrespective of a short-term geopolitical event, or that is going to remain irrespective of any short-term tactical event. So if you keep this broader picture in mind, to my mind it appears that we will see a structural or sustainable scenario at least for 2020 and 2021, where there will be easy liquidity scenario which will feed into getting growth back on table, especially as far as India and emerging markets are concerned. So I remain quite positive on broader Indian outlook. We already have seen some sort of easy liquidity flowing into equities, and this will this is only part correction of the sort of pessimism which we saw built into equity, especially in the wider market, and that has kind of got corrected, and I see this sustaining throughout this year and the next year as well.
Because so easy liquidity finding its way to the equity markets have led to some unnatural valuations for some, even some mid-cap names now that are starting to perk without any support coming in from the earnings side of it. So do you feel that could actually be a very tricky situation to be in, where you have a lot of liquidity, people want to put money into the equity markets, and they're in a mad rush to start investing, but the supporting fundamentals seems to be lagging a bit?
So that is where I think we always make a mistake. There is a sort of theory of reflexivity. As I was mentioning, that one of the biggest precondition of starting the growth, accelerated growth, is an easy liquidity scenario. Our growth also, sort of slowed down to 5% or below because we had no liquidity, or liquidity was not reaching to the users of the capital. So I am of the belief that as the liquidity situation eases out, as the credit availability reaches to the users of the capital, there's enough and more demand in India to feed into the growth. So I think one way to look at it, the markets are high, and earnings growth will not pick up. And right now, my market hypothesis is that earnings growth will pick up, and I also believe that earnings growth will pick up as the liquidity scenario eases out. And because ultimately I am not of the belief that there is a demand problem in India. It is a supply side problem in India, which is about availability of credit, and that's the reason single biggest variable we are watching is that how much credit is reaching to the users of the capital, which will feed into demand, which will feed into growth.
Okay. Do you feel that consumption will turn the page in 2020?
As I said that I think it's again a cycle, and it also accelerates with the why. Just go back and say that why the consumption slowed down. Automobile, housing finance, which are largely dependent on the credit, had an impact on the because of availability of credit, demand slowed down, and whatever money was going into the economy, which was creating jobs, which was creating a lot of keeping a lot of allied sector alive, especially the SMEs and all, I think again got constrained, lost the business. And same way, I think as it picks up, you will see the same wheel turning positive, and the demand will revive, job creation will happen. Of course, a lot of push from the government would be needed. How do you get this risk appetite back on table? And that is where a lot of measures are being taken by the government, whether it was last stage funding by on the real estate projects, or SME recognition of NPAs, and bank recapitalization, and many more. So I think, but the challenge with the risk appetite is that it comes back slowly. It never comes back with it goes away very fast, but it comes back very slowly. So I believe that there will be a slow and steady improvement. It won't be overnight, it won't be very fast, but I'm quite positive.
Growth revival seems to be key right now, Vikas, at least from Budget 2020 standpoint. Really innovative, out-of-the-box thinking and measures required to make sure that we get our growth back on track from the troughs of 5% that we're seeing over the last 1 year. What do you think, or do you have anything in mind which could actually be a good move that the government could make in Budget 2020 that could spur growth?
So I think one very terrible situation happened, especially in the last 12 months, which is a fallout of drop in tax collection, dropout. I think government spending has gone down significantly. And if you see in last 4 or 5 years, government spending was the one thing which was keeping the flag high, and still whatever the growth number we had, that was keeping holding the battle. Private sector spending has still not picked up, and it will still might take time to pick up. So government has to pick up the burden of spending in the economy, and we have seen that has gone away, especially in last 12 months. So we do not mind even fiscal loosened little bit, fiscal losses, deficit is kind of loosened little bit, but government spending has to come back. Once the government spending comes into the economy, I think you can have the rotation going, and the slow and steady improvement in the private capex also happening there. But I think, in my opinion, in this environment where we need the urgent growth back, government has to lead the spending.
Okay, Vikas, just one final question from my end. We have the former Steel Secretary coming up as the next guest. This sector has seen some reforms. Are you enthused by it, or would you want some more to happen?
No, I think there are lots of I think whatever has been done for the coal, it's very good. So I think slow and steady reforms should be done. There's no question on that. In my opinion, and again, I don't know specific thing about the steel sector, what reforms could be there, as I am not expert on that. But one thing in general, I know that in India, one side we have a good infrastructure, or let's say in coal we have a huge amount of coal available, and other side we were importing coal. And right now the bottlenecks are there in between. So we need to remove bottlenecks for similar kind of things, where one side there's a demand, other side is supply, but we don't have enabling infrastructure to facilitate that. Same thing is happening right now in the credit growth. We have huge amount of liquidity, but we don't have money is not reaching to the users of the capital. Same way we had in coal, same way we had in power, same way we have. So every sector we have, there's a power demand, but we don't have, and there are power manufacturers, but it's not reaching to the right sector places, and both sides are suffering. So I think there are many such sectors where we have these bottlenecks being created or being there. Now, how do we resolve that through a structural format is the key to the resolution of India growth story.
Well, Vikas Khemani, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time this morning.